If you think about it, would you rather buy now or a year ago? We all should be more cautious when there's more and more people chasing things. And like Warren Buffett says, we should be more greedy right now because it's a much safer time to buy properties.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odum and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odum, along with Steven Silverman. Steven, what's the good word?
Well, I was just thinking we're living in challenging times now, but often what people are saying is different from what people are doing. We're brokers in the market, and we keep hearing about the death of the office market, and we've been selling freestanding office buildings. The people who are actually going to build their business and need a place to stay are buying their buildings.
Interestingly enough, we all heard, and we all, frankly, I would include myself into that, someone who was worried about what was going to happen with the office space going forward. And we still might have some fallout from the COVID because, for the most part, folks are not enthusiastic, understandably, about getting back into confined spaces with other folks and risk the spread. But I've had a great year with office, surprisingly good year, and had a couple of office transactions. You and I recently did an office transaction. I've done some fairly substantive leases. If you'd asked me on April 1, I would have told you that the office market was probably gone until there was some sort of mitigating drug, but it's not the case. It's not been true. It's not borne out. And I'm not going to be so arrogant to think that we might not have some hiccups along the road, but certainly up until we're recording this in September of 2020, it's been pretty good up until even last week where we got something done. So it's interesting. It's an interesting market, Stephen, and we're going to have a great guest today talking about the retail market. We've not had somebody on talking about the retail market in a while, and so we're excited about having him on. Wanted to first take a moment to recognize Chicago 201489, who left a review on the iTunes store. He says, "Great show, specifically for the Florida market. Solid guest. One request from me would be more Southeast Florida content. Keep it up." We want more Southeast content too. It's a challenge for us as we don't work that market to get the contacts, and we rely on our listeners to make connections for us in markets that they want to hear stories about. They want to hear about things happening in their market. So Chicago 201489, thank you very much for that review. It goes a long way for us getting guests in the future. If you've not done so, please go to the iTunes store, the Google Play Store, and leave a review for us, and we will happily read your kind words. In fact, if you want to leave some nasty comments about Steven, I'll read those too. I like those, but we haven't had any in a while.
That's right. We haven't had any. We haven't had any
in a while.
But seriously, those kinds of comments and reviews help us get more guests, and it's time consuming finding them, but we try to get great content. We're all in this to learn together.
My favorite reviewer, Stephen, was the one that asked for we could get another English speaking guest besides me. I thought that was awesome. But guys, if you have somebody in the Southeast market or the Northeast market, the Northwest market that you think would be a great guest for the show and add value, please make the introduction. It is a lot of work that we put in trying to produce this show. And if you have some ideas on what would be good topics and you have somebody that you think would be a good speaker, please let us know and we'll do our best to try to get them booked. Stephen, is there anything else before we roll into our guest?
I think we're ready to rock and roll. Today we have with us Derek Waltchack. Derek is a partner in the firm Shannon Waltchack in Birmingham, Alabama. Derek is a returning guest, and we're glad to have him back. Urban revitalization is thriving in Birmingham, and Derek's leadership stands out as a prominent force. He has put his stamp on downtown development in Birmingham in 2010 with commercial development near Railroad Park, spearheading a $4.5 million renovation that transformed a 100-year-old warehouse into a cutting-edge business center. Then in 2013, he launched another progressive move, Birmingham's first crowdsourced development. The popular development is now known as the Stockyard at Railroad Park and includes commercial space using shipping containers, another first for Birmingham. A recent article in the New York Times lauded the progress in downtown Birmingham, featuring Derek as a key player. Derek is also somewhat of an expert on Bitcoin. He has been recognized as a top producer of commercial agents, and he is also a part-time farmer. He has a chestnut farm, he keeps bees, grows pumpkins, and has Alabama's only truffle orchard.
Oh, truffle orchard.
Yes.
Wow.
So, Derek, welcome to the Invest Florida show.
Thank you. Glad to be here.
So chestnut farmer, I missed that the last time. I knew you were doing the chestnuts. I didn't know you were doing truffles. Did truffles grow in Alabama?
We'll see. I always make life hard for myself, I think, because I like to try things that others have not tried. And there's usually reasons why people haven't tried them. But there's a company called the American Truffle Company based in San Francisco. And what they do is they will team up with people who have, rural land or a farm, and they team up with you to provide the truffle trees, the know-how, the expertise, and then you plant according to what they ask and tell you to do. You test and all that sort of stuff, and then the trees start to grow, and then you'll know if you have truffles in like 7 to 10 years, and then they take a piece of what you grow.
Well, they grow under, right? They attach themselves to the root system, correct?
Yeah, so truffles are nothing but basically mushrooms in a different form. They're a mycorrhiza, and a mycorrhiza is just something that grows on the root tips of trees. And every tree has mycorrhizas on the roots. It helps the roots uptake minerals and things that it couldn't otherwise uptake. And then in return, in the winter, when leaves come off and the sugar comes back to the roots, it feeds the mycorrhiza. And so truffles are just like that. And then eventually, when truffles decide they want to grow and spread, they'll produce these kind of hard balls, which is that is a truffle in the ground, and it will grow. And then, the way God designed it when He created the world was pigs have a sex pheromone that matches the scent of truffles.
Oh my gosh!
And so the pigs will dig up the truffles, and then as they go along through the forest, basically they are the vector for the seeds, and then they'll poop, and that'll plant more truffle, more mycorrhiza in the earth, and then it just kind of spreads from there.
Oh,
and so if you cultivate the correct kind of truffles, which we're doing black Perigord truffles and a type of a white truffle, and then you try to keep the other mycorrhiza out, and then all the conditions are right, then you'll end up with some truffles.
Huh. And they sell for a pretty high penny, don't they?
Oh, yeah, they really do. And it depends on the season. Sometimes Europe will have just a fantastic season with all the right conditions, the right amount of water at the right time, and, the value of truffles go down. But the unique property of the truffle is that it has basically a 4-day half-life. And so what that means is if we get a truffle straight out of the ground in 4 days, it will smell half of as strong as it did on the first day. And then, every 4 days you're getting that cut in half. And so if we can establish a big culture of fresh truffles in the United States, then, we don't have to import from Europe, and our truffles will be much fresher and more potent. It really hasn't been established in the United States yet, but I think over the next 10 to 20 years, there's enough people doing it that you'll see more truffles on people's plates.
Well, it's kind of like wine. Wine came a lot later to the United States.
It's a good point. Yeah, that's exactly right. And typically truffles are very happy in same regions where you produce wine. So there's a lot of folks in California trying this right now.
Have you been to Europe during truffle season?
No, I have not yet. I want to, and read a ton about it. It's interesting. The harvest of truffles, you use dogs. You don't use the pigs because destroy the truffle.
Yeah, correct.
But there's a specific breed, a Regato Romagnolo dog, and a properly trained truffle dog will set you back $10,000 to $15,000. But they're like your tractor. I mean, they're the ones who allow you to pull them out of the earth. So they're a very vital part of the process. So if this works, one day we'll get some of those.
Yeah, in another world, I used to be in the food business. We distributed food.
Really?
And we would import truffles being one of them, but also cheese and olive oil and things from Europe and redistribute it throughout the United States and into the islands. This is when I was living down in Miami. And the first time I went over for truffle season in Europe was, we get just little bits here and there of what we get flown in from Italy and France. And then when I went there the first time, it was like so decadent because, we ate in one of these places and they're serving chanterelles and all the seasonal mushrooms and the
wow.
and the truffle. And they're just shaving truffles like piles off onto your plate. And I'm like, oh my God, it was just so decadent. And I love truffles, man. Yeah. Oh my gosh, they're so good. Anyway,
I do too. There's nothing better than just some warm noodles, some butter, some salt, and then some truffle shaved on top.
Oh, no question incredible. About it. It's delicious. Anyway, enough of truffles for the day. Let's talk real estate now.
I was about to say, is this a truffle podcast?
Truffle podcast. And one more before we get rolling into it. You started a podcast yourself now too, didn't you?
Sure did. Thanks for asking.
Tell us about it.
Yeah, the show is called Brokerlord, and helping brokers become landlords. And the concept of the show is I will interview 50 brokers in 50 states. So eventually I'll hit every state. And I'm interviewing a broker who has gone from brokerage to ownership. And then we talk about kind of their first deal. How do they get from just straight brokerage to some ownership? And some interviewees will be somebody who owns one property, or Karen Hutton is an interview in the first season in Tennessee, and she's with Hutton Company, and they've done over 1,000 build-to-suits. So specifically in that show, you get to hear Karen. She grew up in rural Tennessee and kind of how she created her empire. So it's called Brokerlord. It's on wherever you get your podcast, and I'm really excited about it.
Yeah, and obviously the beautiful thing about it is you're learning from people who are building these cash flows, these supplemental, some of them become their primary source of revenue stream. And real estate, we're all in this business because it is, as brokers, it's a great business. And it's one of the best businesses that we know of anyway, that you can earn this cash flow and be able to control your destiny. And I think that's what's in common with our listeners too, whether broker or not. It's not really important. It's really, it's the experience of how people are getting from point A to point B to making lives better for themselves and their families, right?
Exactly. It's funny, within the brokerage community, about 90% never actually own any real estate. And as brokers, and I know this isn't a show for brokers, but as brokers, who has a better vantage point to see good deals and bad deals and to learn what's good and what's not good? So for some reason, our industry just has not taken the leap towards ownership like you would think. So hopefully the show will help a little bit. And then, like you said, people who aren't brokers, and they can learn a ton from this as well.
So how can people find if they want to listen, Derek?
Yeah, so just honestly search Brokerlord. They can go to brokerlord.com, and then from there you can pick, iTunes, Stitcher, Google podcasts, etc. But if you just search it, you'll find it. And then, pick a state. We did 7 states for the first season, and I'm in the process of recording the second season now. And so I hope to have that out Christmas time, maybe late winter. So we'll see. But yeah, it's been a fun process, and it's been awesome, meeting people who I probably wouldn't have met otherwise. And
the interesting thing is, while doing a podcast, you learn so much because you speak to so many interesting people. Very much so. Yes.
Well, tell us about your business. What's going on? Just as a reminder, Derek, he owns his brokerage in Alabama. He invests all over. He owns properties here in Florida. In fact, he owns one here in Brandon. And we're interested to know a little bit about the situation that we find ourselves in now, how you're faring, how you're dealing with tenants and your assets and whatnot. I'm interested to get caught up with you there.
Yeah. So let me break it down by just a couple different verticals. So as a company, just to kind of give you a baseline on who we are, we have about 30 people in the company. We have a full brokerage and a full property management division. We own about 2.5 million square feet of mostly retail and some office. And then we manage another million square feet or so for third parties. And then we also have a full service brokerage shop. And through this crazy year, this spring break that lasted forever, the brokerage has been off some, although the second quarter was like almost goose eggs for us. Third quarter is ending up pretty good, and I think the fourth quarter is going to be really good, really strong actually from a brokerage standpoint. Property management's always the saving grace during these times when there's not much activity, and then from the investment side, from an acquisition standpoint, we've certainly slowed down that process. And we can get into that in a little bit. And then from a portfolio management standpoint, when that Friday the 13th, which was really when it all kind of hit the fan in March, we went, we like every other firm in the United States went virtual. We sort of had an all hands on deck approach to reaching out to our tenants to see what kind of help they needed, how we can help them. We talked to, bunches of other firms to kind of see what are some best ideas that we can incorporate. And honestly, in hindsight, I think we did about as well as we could have. Our portfolio held up pretty strong, and we're back to collecting 100% of billed rent at this point. So we're in really good shape, and we'll see what happens with the economy over the next 6 months. But if that was it, I think we're going to be okay. But we'll see if that was it, quote unquote.
So that when you said you're collecting 100% of rent, do you have tenants like gyms and restaurants? And
we do, and I said, and it was specifically 100% of billed rents. And so that doesn't take into account vacancies that we have. But I think our portfolio is about 95% occupied currently. And maybe let me get a little context on the portfolio composition. We own the lion's share of our properties are small unacred retail strips. So think 10, 20,000 square foot retail centers that are close to housetops. And they feature typically a large amount of service providers. So, these are shopping centers that have maybe an AT&T store, a nails, a hair, maybe a vet or a dentist, some other medical, and then some restaurants. And we own those in the Southeast. We're wanting to grow in the Midwest, but we paused on that when COVID hit. But we own properties in Florida, Alabama, Georgia, Tennessee, Virginia, North Carolina, and I think that's a complete list at this point. So we were fortunate because the localities where we are, it was not as hard hit by COVID, and then you had governors who chose to keep things more open than in the Northeast. So we benefited by being in that environment. That wasn't anything that, we knew what was going to happen because we didn't, but that helped us a good bit. But yeah, we could talk more about this property type, this small unacred retail strip, but we firmly believe in this as a retail delivery device for the future. And we think that
Derek, retail's dead. Haven't you been reading the Wall Street Journal? I mean, it's over.
Well, okay. So let's talk about restaurants maybe for a moment.
Okay.
All right. So, you have restaurants that are as small as 1,000 square feet, a little Subway, up to 6, 8, 10,000 square foot sit-down chain restaurants. And what we have seen in our portfolio are that we don't have many large chain restaurants in our portfolio, but those are the ones that are hurting for sure at this moment. The smaller the restaurant, I think the more nimble and probably the better cost structure that they have. So we have, I think, over 400 retail tenants, and out of that group, 10 have closed, and 8 of those were restaurants. So it is true that restaurants are hurting, but at least for our portfolio, not to the degree that headlines would let you believe. But I think that is just a good attribute of our portfolio.
It's interesting about retail, and of course I say this firmly with tongue in cheek, that if you talk to anybody, and many times you talk to in real estate investors too, and you'd expect them to know better. But the common theme when you speak to the layman in the street is, oh man, retail is terrible. Well, why do you guys do that? It's terrible. And sometimes you just have to walk away because you don't want to have to explain to somebody that what you see happening in a covered mall has nothing to do with the local retail center. Nothing. It's zero.
That's right.
It's an apple and an orange comparison. And as long as there's 40,000 cars passing in front of a retail center every day, and it's got a good ingress and egress, the center's not going anywhere. Not unless we get rid of our cars. And I don't see that happening in my lifetime. So people are very confused about retail.
Well, they're different products. I mean, those big malls are essentially inventory-driven vehicles, and
Derek's
strip centers are service delivery.
And grocery and service deliveries, exactly. And as long as there's cars driving in front of them.
The mall sort of serves a different function too. I mean, I always think about malls when it was time for me to go back to school. It's time to get your clothes. When the holidays are on, it's time to go buy the gifts for everybody. It's those type of shopping events. It's not your daily needs. Whereas a grocery anchored and then, the little retail strips that are near your house, that's where you're going to frequently, that's the place that your wife's like, let's just go get so-and-so's pizza. And you're like, we've had that, every week for the past 10 weeks. But you do it because it's convenient. It's right there. It's easy. And you know the people. And so, it's kind of like what's old is new again. If you think about a downtown 100 years ago, you had a ton of these little shops, right? It was, you'd have 2, 3, 4-story buildings where people lived upstairs, and then you had the little mercantile or whatever it is on the ground floor. And, these modern day strips on busy streets, while they may not have the living and the loft component above them, the little shops that serve those necessities, they're still needed, and they probably will be needed forever.
So what are you doing to try and help your portfolio along? I mean, did you go with the whole program of helping some of them stagger their rents and work out something until they got their footing? And what are you doing going forward to just try and maximize for your people?
That's a great question. Let me say this, a corollary to this. If you look at, like, currently in the United States, there's a decision being made by college football conferences whether they play football or not, right? And if you look at the way the SEC, which I'm a Tennessee fan, and there's Florida in your market, but if you look at the way the SEC has made their decision, they've decided they're not going to make decisions until they have to, and they're going to watch what happens to other people. And so they let the Big Ten go first. I guess it was the Big Ten who decided they were not going to play football, right. and they could kind of observe and see what happened to them. Straight out of the chute after that Friday the 13th, some landlords raised their hand in my market in Birmingham and said, we're going to help all of our tenants. And that week they look like heroes in the paper, and that's fine. But we took a little bit more of a measured approach where we kind of waited a little bit. We immediately reached out to our lenders to try to secure 3-month deferrals, which we were successful in getting for most of our properties, just to give us, operating room. And then with tenants, we reached out immediately to make sure that they understood all the different resources. We tried to educate them on the PPP loans and just all the various things that they can use to try to help them. And we did that. And then with tenants who we could tell they really had a need, then with some of those, we did work out deferrals, where we gave them extra time to, basically we're going to cut your rent by 20%, 50%, whatever, and then you guys can pay it back over the next, 6 months or over the next 12 months, whatever. Everybody's deal was different. And I'm kind of hesitant to say too much just because, if you tell everybody we're going to help, then everybody wants help, right? And we want to avoid that situation in our portfolio. But,
right, of course.
But we did a good job of really assessing who really does need the help. And then also conversely, who needs the help but is probably not going to make it on the back end. That's another judgment call we have to make. But I think we did a good job. And then, there was other various things that happened in Birmingham. Specifically, there was an organization that was spun up really quick that said, okay, hospitals need food right now, and people who are serving people need food. So why don't we in bulk buy food from all these restaurants that aren't doing business right now, and let's raise money to that end. So in Birmingham, there's a big initiative. I don't know how many hundreds of thousands of dollars were raised, but were raised so that we could feed our responders and also benefit our restaurants.
Wow,
so they
great
wouldn't
program.
go out of business. So there's some really cool stuff that happened in that time period. That happened. I don't know if I fully answered your question, but that's what I have.
You know, all the negativity that comes out around these types of situations, also sort of the things that make America great also emerge. That the amazing generosity of people in this country and their consideration of others, that you hear those types of stories where there was money raised within the community to make sure that their restaurants don't go away and it served dual purpose. And obviously we all took a hit on a revenue standpoint, but people were still willing to reach into their pockets because they cared about other people. That's the kind of stuff that
exactly
it would be it's nice to hear, because they're just in this era that we're in where there's so much hate and vitriol. It makes you feel good that when you hear those types of stories. So thanks for sharing that.
Yeah, I'll tell you one other quick one. So in a building in downtown Birmingham, we own. There's basically a dog groomer. I forgot her name and the name of the company, but maybe we can put it in show notes later. But she's a formerly homeless person who got her life straight. And then she established a dog grooming company and then moved into our building. So she had a business going for maybe 5 to 10 years. And then it all hits the fan, and, the health department rules have totally changed. And so she schooled herself on all the rules. She closed her business down for about a week and a half. Then she reopened, but could only do about a third of the prior flow of animals to wash and to groom. But she figured out a system. Her accountant literally loaned her money. Her accountant maxed her own credit cards out to loan to the proprietor so that she could keep operating until basically her throughput could get back up to a normal level. It has since gone to a good level. She's doing great. She's repaid her accountant. But just an amazing story of someone being so kind to somebody who's a client, that enabled her to stay open, and it enabled her to pay us rent. Just really cool.
Yeah, that's great stuff.
So, yeah, I love those stories, but I have a question to ask, because especially coming from your perspective as an owner-operator and also as a broker, there are centers that haven't been getting their rents and still have to pay their mortgages. And are you seeing signs of distress coming?
Yes, I'm sorry. I did not mean to imply that there weren't problems, because there's problems everywhere. I mean, it's bad. It's bad in power centers. It's bad in malls. I just think we were very fortunate in the property type we chose, and then the specific centers that we chose to buy. I think we were very fortunate and probably made some good choices.
And the way you managed the situation. I mean, some people have the same kind of centers, but they didn't manage the situation or confront it when it came.
Yeah, I can totally see that. I'm trying to think where to go with that. But I think, power centers, the dynamic that's in play there, and of course, for listeners who don't know, a power center is a large center with like a Target, Best Buy, Old Navy, whatever, those big boxes. There are less and less big boxes that are in business today. And so, whereas if you had a vacant 40,000 square foot box next to a Target in anywhere, Alabama or anywhere in the United States, for that 40,000 square foot box, 10 years ago, you probably had 10 different folks that you could call on, maybe more. But today, that number is way down. It might be 2 or 3. And most of them are going to be sort of the off-price bargain hunt type of tenants that will pay you half the rent that other tenants were paying 10 years ago. So it's a mess in the power center world for sure.
Yeah, and mall too. I mean, covered mall. Yeah, all it did really was accelerate a pattern that had been forming, as soon as Amazon came on, right? I mean, if it can be purchased online, the walk-in stores have just the brick and mortars have just been hammered. But centers like yours, as we've said, as long as there's 45,000 cars driving in, it's convenient for people to get in and out, as grocery anchored centers are, or as I know that your center here in Brandon is a restaurant anchored, and it's convenient to get in and out of. You got ingress and egress on both sides, and well-known center. Those are not going away, and in fact they maintain incredible occupancy rates. And in our centers that are similar, all the centers that we have that we manage that are similar to that, Yeah, we've had some challenges, but the occupancy is still way up there. We've, some of them, I know my bike shop, he's in 3 months, the first 3 months of COVID, he did more than he did the first 3 months of COVID than he did all of 2019.
I believe that.
We have a cheesesteak place. He had the first 2 months of COVID record. And so it's convenient. The grocery stores were a madhouse. People were afraid of going into the grocery stores. And so the order takeout, his was easy. And the pizza place that we have in the same plaza, they knocked the cover off the ball too.
Well, if you really want to see records, just go to the liquor store.
Oh yeah, the liquor stores.
It's true. Or the vape or the CBD store as well nowadays.
Yeah. No, any kind of the sin stuff. What's interesting, we haven't seen the cannabis, which, I know they're doing really well. I know that. But the cannabis stocks are completely they're unplugged from what's going on in the market. Florida, we're medical marijuana state, and there's lines out the door, and there's been lines out the door ever since COVID started. People get stressed out, and they're consuming more cannabis than they were before, but look at the stock anyway. There's a little bit of a sidebar, but the cannabis stocks are like at record lows.
You're right. There's in technology, there's a law. It's called Amara's law, AMARA''S. Okay, I think his name was Roy, and he postulated that that in the short term, the effect of technology is often overstated. And then in the long range, it is always understated, or how you think technology is going to work. Uh-huh. And I think with cannabis, that had the same sort of effect, where all of a sudden, with technology, it opens up worlds, and like you can do things that you couldn't have even thought of before in ways, and so it grabs people's mind. And so if you think about the internet, the .com stocks that blew up in the 90s, and then it absolutely crashed, and then now those stocks are even much higher than they were in the 90s, right? Mm-hmm. I think marijuana had the same sort of dynamic playing, where people are like, oh wow, this is going to be growth, it's going to be huge. It probably will be huge. But it just takes longer to implement all that stuff than people typically think.
Yeah, but any of that, whether it be cannabis or alcohol or anything the entertainment where you can kind of go, I don't want to talk about cannabis being entertainment, but for some, I suppose it is.
Do you have something you want to share with us?
Yeah. So just taking a bird's eye view of the market now, do you have any special concerns going forward and directions that you'll rather steer into for the future?
Yeah, I do. I think the average person's view was in February, the economy was just absolutely on fire, and it was. But it actually was already showing some signs of slowing down at that point in time. Okay, COVID came, and I think the majority of people kind of see COVID as a temporary thing, which Lord willing it will be. And that once we can get a vaccine, that it'll all be over, and we go back to like our February of 2020. We go back there, and I don't think that will be the case. I think the whole past 6 months or whatever it's been has done so much damage to the economy that it's going to take a really long time to dig out. And I also think that with stocks, if you look at what's kind of happened with interest rates going really close to zero, basically the underwriting interest rate or the discount rate, being close to zero, you've pulled forward a lot of the value of stocks into today. So you can get the value of what you would have gotten had you held for 3 or 4 more years. So I worry that once COVID is over, that we're in such a depleted manner that we could have another recession. Or, maybe even worse, if they print even more dollars, that you really launch inflation in a big way, and then you have to raise interest rates. I mean, that would be a nightmare scenario, I think, for real estate holders. So the future's not that clear to me at this point in time. And then obviously we got an election.
And here's a flip side argument I want to further to obscure or muddy the waters here, is because of the $6.7 trillion or whatever the heck the number is now of stimulus, that money's has to go somewhere. And if we have any sort of just even a normal and gradual that is going to, ascent from where we are, that it's going to end up in an asset bubble. and that there's so much liquidity in the market that you're going to see an acceleration of asset pricing across the board, including real estate. And that concerns me, because that would end up in a 3 to 4 year situation where, you know, you're looking and you're going, oh my gosh, where are we, and where is this leading to? And we always know where that ends up. So that's concerning.
Yeah, totally.
To me.
I think the good scenario is, you know, we don't have another recession and we start growing. But again, because you've discounted your stocks at such a low interest rate currently, the growth can't be there. I mean, that's going to, you know, you're not going to be getting value. And so the chase for yield is going to be intensified, even and doubly so with more dollars in circulation. And so it might be a great couple more years for real estate, where even more money comes and chases it and cap rates go down further.
Yeah.
That might be the time to sell it all.
Yeah. Yeah. I hear you. We have this discussion every single episode about.
Do you really?
Yeah. What the future holds. And we've got a pretty mixed bag of what people think.
Mm-hmm. And well, it gets complicated because then you start talking about different asset classes. You know, we've been talking about retail and how retail's changed, but you know, each asset class is moving at a different velocity and doing different things. So it's hard to have a crystal ball.
Yeah, and we don't know. I mean, office is the one that's lagging all of this, and we just don't know. I mean, are people really going to try to run their companies by Zoom meetings? I don't think so, but how much are people going to come back into the office, and how much of the working from home is going to stick? I don't think we know the answers.
I don't know either. I'm very thankful that we're not super heavy in office.
Yeah.
I'm not a fan of office as an asset type in general.
Yeah. Yeah. It's very opaque what the future holds for office. And I like office. I do. But.
Do you like it? Okay.
Yeah. But we run this shared office suite here. And one of the things we saw in the market when we had the last crash was they went home. And it's funny when I hear people say, well, you know, office is going away. Office has been hit pretty hard. And you know, people are going to run their companies from Zoom meetings. And I think that's absurd. You have to, in order to build a culture, you have to have people together and formulate ideas. And you can't do that by Zoom.
Well, we can postulate all we want, but actually just looking at the numbers, office isn't so terrible.
No, office is actually doing
the vacancies aren't bad at all. And we recently had a podcast with CoStar looking at the office market and talking about it, and the numbers really are not bad for office.
No, they're not terrible. And I understand people saying, well, when their lease runs out, and we just don't know. We don't know, but I know what we know from our shared office space that we manage is that people came back in the market from the embers of 2008, and they sent everybody home because they're like, oh, the first thing we get rid of, we can lay off employees, and then we can shut our office buildings. And we had Skype then. People don't realize that. They don't remember. We also had a Microsoft Office product that we could do conference calls and whatnot. It was a little bit bulkier than what we have now with Zoom, but we still had it. But people very quickly started to realize that people working from home on their exit interviews, the people that they wanted to retain, were saying, we don't feel connected to the organization. They left. They went to places they felt more like why people go to work to begin with anyway. So they started to dip their toes back into the shared office space and then moved on to larger spaces. So we've seen this cycle before. I don't think it's going to be different. But of course, what do I know? I mean, I told people I can give you my opinion, but everybody's got an opinion. It doesn't mean mine's right, but we've seen it before. Yeah. So I have some level of confidence that we're not going to see the apocalypse of the office market, although it's yet to play out, and we just have to see.
Yeah, it'll be interesting. Do you buy the idea of corporations wanting to move out of large city centers, or at least a bunch of the people who are housed currently, like in New York and Miami and expensive places like that, maybe keeping executives there, but then moving the rest to Nashville, Austin, whatever. Do you buy that trend?
I think it depends on the size of the organization. I mean, if it's a type of organization that has thousands of employees, and they're doing a lot of back office, I can see that happening. And actually, our market is a beneficiary of that. But a normal creative kind of office thinking, Chicago, New York, I think they'll stay.
My feeling about it is that will happen in the short term, But what will end up happening is that, this is a repeated theme, don't bet against people being people. They will forget about this COVID virus. This COVID virus will go away, and they'll go back to living the life that they want to live. I can tell you from an economic development standpoint, and this is a conversation I had in confidence with a local economic development person that was in play for a very large company coming to Florida. Of course, this company was the epitome of the libertarian company that didn't believe in taxes. They didn't want to see corporate taxes. They didn't believe in personal taxes. They believed, and they hired people with this premise that it was very libertarian, very entrepreneurial. And when Tampa was on the short list, it was Tampa, Charlotte, Nashville, Austin, and Boston. Now, which one of those is not like the other? And Boston. Yeah, exactly. So the folks here were very confident that they were going to end up in Tampa. Very confident, because they're all anti-tax people. We're no tax state, no income tax state, all those sorts of things. They cut out all kinds of deals for them on the property taxes to kind of lessen the property tax effect here for the company to make the move. Right. And they were confident up until the announcement came. And you know where that company selected?
They go to Boston.
Boston. They would.
Let me ask you this: where did their CEO live?
Up there. Lived up there.
Yeah.
70% of their executive team said they would have left the company if they moved to Tampa.
They would have loved it. They were wrong.
And, the thing about it is that the reason that they said they wanted to stay is the things that we don't have. Transit, the arts, the things that make for them that what they're accustomed to make their life worth living. They are like, we feel we've got better opportunities here, so they decided not to. I just find it to be very ironic. They're so anti-tax in the highest tax state, in the highest taxed region, decide that they're going to stay there because that's what they're accustomed to, and that's what they like, and that's what they're used to. So
that's interesting. Yeah, I guess they just deemed that the price of admission is fair.
Yeah. I mean, at the end of the day, and this is why I say, I think that you're seeing it in the New York market right now. You're seeing it in the Northeastern corridor that they're having a tough time bringing people back into the towers. I get it. But
I can imagine.
Yeah. Yeah. But people don't want to get on a subway train and that sort of thing. I get it. I understand. And that's going to be until there's a mitigating drug, until there's a mitigating protocol that you can basically drive this disease down to nothing. That's going to be the case in these larger cities. But I think at the end of the day, those folks that are accustomed to living in that environment, they're not going to give it up.
Well, the interesting part is there's been a huge change in real estate values there that we haven't really seen in our type of areas. The suburbs over there have just suddenly become really in demand, really expensive.
Yeah,
and the inner cities, there's probably bargains, probably a good time to buy there now.
Yeah.
Oh, I think so. I think there probably will be a lifetime opportunity in New York. And I don't know when it's going to be. I mean, it may be right now. Now may be the very time, or it could be in 6 months, a year, if things get a little worse. We'll see how winter goes. But, yeah, I think that'll be an incredible opportunity.
Well, tell us about you. What are you doing from an acquisition standpoint? Have you just cooled your jets? Or are you still out looking? And if you're looking, what are you looking for?
We raised a $25 million fund to go after this segment of the market, like I described, the convenience retail center market. And we currently have $2.5 million left to deploy. We have a property under contract in Asheville, North Carolina at the moment. And if we close on that, there's still a couple things we need to check off on our list. But assuming we close on that, then that'll close out Fund 1. We're laying the groundwork and are ready to go fundraise for Fund 2. We've got, basically our papers are all drawn up. We're ready. We just want to get this other deal closed before we really work hard on Fund 2. And we'll hope to do maybe a $30 million raise for this one. And so I mean, our appetite is strong. We've raised our kind of our model of what we're looking for. I guess the easiest way to put it is if something we would have bought for a 7 cap a year ago or 6 months ago, that needs to be an 8 or better now.
Okay.
That's just, I think, prudent, and I think it's also an acknowledgement that lenders are having a hard time with retail, even the type of retail that we're after, which we think is much safer, but you still have the retail label, and so lenders are requiring more equity. Rates are better, but instead of a 65% loan to value non-recourse, which would be kind of typical for us. It's more like 55% right now. And so you have to put more cash in, so you need a better return, obviously, for those extra dollars coming in. Yeah, I mean, we're looking for more. Obviously, not as in a hurry as we were a year ago, which is kind of funny because if you think about it, would you rather buy now or a year ago? We all should be more cautious when there's more and more people chasing things, and we should be, like Warren Buffett says, we should be more greedy right now, because it's a much safer time to buy properties.
Yeah, be greedy when people are fearful.
And what about debt? How are you finding the debt market different and putting it to work for you?
Yeah, is that coming from CMBS or is it banks, or where are you getting your debt from?
Like I said, we're kind of in a weird little space where, given the right deal, we could do a life loan, we could do bank loans. I mean, they all need to be non-recourse for this fund structure that we have. We're not, the principals of the firm aren't willing to sign on the debt for this, and we shouldn't, just based on the amount of equity we're putting in these deals. Like right now, where are we going to get loans for these things over the next few months? They're going to be local banks,
okay,
where we put in enough cash that they allow it to be non-recourse. Because life companies are scared of retail, and then I hate CMBS. I don't ever want to do another one if I can avoid it. So every once in a while, it works, but I hate those loans.
And so what are the bogey they're looking for to do a non-recourse deal? Is it 35, 40%, 50%? What are they looking for?
No, for our deals, it used to be probably 65% loan, 35% cash in. But for instance, the one that we're working on in Asheville, North Carolina, that's a 55% loan to value loan.
Okay.
And are you seeing prices like go from the 7 cap to the 8 cap?
Yes, but not many. So what sellers at the moment in our niche are saying, okay, if I don't have to sell, I'm not going to sell. Because why would I? The buyers are more picky and there's less of them, and the lending market is not that active. And so for those who don't have to sell, they're not selling. And then those that need to sell, they kind of have to meet the market, which I think is probably in that 8 cap plus market rate that I just described. So the deal flow is not very high. I talk to brokers all across the country, and, the ones who are specializing in the retail strips are, their business is way, way, way down. And a lot of them are kind of pivoting to single tenant net lease deals, because that is the product type that seems to be moving in this market.
Right.
And in fact is actually doing really well. And cap rates on that might even be coming down, not going up.
Now, investors in your fund, how are you acquiring those? Are those in your circle, or are you going through a broker dealer to do those fundraisers, or how are you doing that on the equity side?
I want to be very careful with fundraising laws and rules.
Yep.
And I'm not an attorney. So for the first fund, they were beyond friends and family, but mostly local investors who are aware of us in Birmingham.
Sure.
Fund 2, we are going to cast a wider net, and I'm not sure what else I should say on that.
No, I get it. You got the SEC laws that you don't want to step on. Yeah.
But I will say we are going to cast a wider net for Fund 2 as far as investors are concerned. And we are setting it up to where we can, quote unquote, advertise, although I don't think we'll actually advertise per se. But it would be something where on a show like this, I could say, hey, we're raising equity for Fund 2, and this is what we're looking for, and that sort of thing.
Yeah, the laws have become more liberalized on general solicitation, but as someone who's been under investigation twice for general solicitation, you don't want to be and have an SEC.
Was that for real estate, Eric, or on the street corner?
No.
From pot to prostitution.
That's right.
This is a great podcast.
I mean, let me tell you, if I were out soliciting generally on the sidewalk, I would have been out of business and filed bankruptcy a long time ago. Nobody wants to see me naked. I can tell you that right now.
You know what I've learned in a related business? Everything has a price, Eric. You don't give up. Don't give up.
Not easy around here, Derek.
So anyway, Derek, you can see what I have to put up with. But so, Derek, if people want to reach you either to find out about investing or if they have deals that they want to talk to you about, how can they reach you?
Yeah, probably 2 ways. If you want to email me, you're welcome to do that. It's a real simple email. It's dw@shanwalt.com. That's dw@shanwalt.com. You could also go to brokerlord.com, and you can check out the podcast there. And I think that my contact info is on there as well. And then my company, it's Shannon Waltchack, so it's shanwalt.com.
Awesome. Derek, anything else? Any parting words of wisdom for us?
No, I'm getting worried about you, Eric. If I need to come down and buy you some soup, I'll be happy to do that.
Just check out the corners.
That's right. No, I think it's good. I think you guys do a fantastic job with your podcast, and you ask a lot of great questions. So I appreciate that, and thank you very much for having me on.
Awesome. We appreciate your time, Derek.
Thanks, Derek. Talk to you soon.
Okay, guys. Thank you.
And that was Derek Waltchack. Stephen, what were your thoughts? We always love having him on the show. He's great.
Well, we're talking to a smart, thoughtful operator who thinks about the market. And while everybody's talking about the death of retail, he's actually experiencing it. And if it's done right, retail will continue. It just will be different. And he's moving forward to continue building in something where he specializes and he understands.
A smart, thoughtful operator. Wouldn't it be great to have a partner like that, Stephen?
I've been looking, Eric. I've been looking.
No, but it is great to have Derek on the show. He does the retail. It's hard for us to find. There's not a lot of retail investors out there. Of course, retail has a sullied name in the streets. Some of it unfair. I certainly believe strongly, along with what Derek believes, is that street level retail, grocery anchored center, restaurant anchored center, those things aren't going anywhere. They're going to be good investments going forward. We love managing them. They're assets we understand. And, we're looking for some ourselves. So, Steve, is there anything else? How about if folks want to hear more great guests like Derek? Where would they go?
Well, the place to go is to our website, www.investfloridashow.com. Also, download the app so that you can listen while you're mobile or in the gym or in the car.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odum and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.